Good afternoon from Leavitt Recreation and Hospitality Insurance. My name is Damian Petty. I'm a broker with Leavitt, and we sell and specialize in campground insurance all over the country. We have 12 different agents, so depending on where you are in the country, you might work with any one of us. But feel free to call or ask questions or talk to any of us if you ever have a question or a concern. Today I'm going to be talking to you about coinsurance. Coinsurance is a common clause in most people's property policy. We want to make sure that you're aware of coinsurance. It is one of the things that I see people getting very upset after the loss because they didn't understand that they even had it or they didn't know how it worked. So with that being said, coinsurance is a clause within the policy where the insurance companies put that in there to ensure that you will insure your buildings and contents and business income to the proper value. A lot of times what we find is people underinsure their buildings or their contents, not because they're trying to be deceitful, but more because they're not knowledgeable about it. They're not a contractor. They're not building on a day-to-day basis. They don't know that the cost of labor just went up or the cost of lumber just went up. So therefore, it's really hard for you to determine the cost to replace your structures. But the insurance company puts that responsibility on your head to make sure that you do it right. But then we don't go out and hire a contractor or an architecture firm to actually give you a true cost on the breakdown. So with that being said, most policies have an 80 or a 90% coinsurance clause on the policy. Now, don't mistake this for medical insurance. If you hear that and you think, oh, okay, well, the insurance company is going to pay 80% and I'm going to pay 20% of the loss. That is not what we're talking about here. The insurance company is looking at that if you had a $100,000 building and it was on an 80% coinsurance clause, you should insure the building to 80% on the paperwork or more. If you do it for less, now you're underinsured and they can come back and penalize you. So let's use a real life example. Let's say we have a $500,000 main building and that building had a roof loss. But you just bought the business, let's say last year, and that main building we now know cost $500,000 to rebuild, and we were on a 90% coinsurance clause. So the minimum on the paperwork you should have insured it for was $450,000. However, the old owner had it insured for $350,000, and you adopted that building value, but you hadn't gotten around to actually having an architect give you a bid or have a contractor give you a bid on what it would cost to replace the building. And now we have a hailstorm that goes through, does damage to the roof, and the roof's leaking. And that damage was worth $25,000. The insurance company would say, okay, not a problem. The hail coverage is covered, and we have the $25,000. We agree that that's what it costs to replace the roof. And at that point, they would then do the mathematical equation of did divided by should. So what you did insure it for divided by what you should have insured it for. So for example, we had $350,000. That's what you did insure it for divided by what we should have, which is $450,000. That equals 0.77. So if you now take your roof loss of $25,000 and multiply that times 0.77, that equals $19,444. Now we apply your deductible, and most people's deductible is $1,000. And at that point, you have $18,444 that's being paid to you for your loss of $25,000. Your coinsurance penalty was $5,556. So sometimes people say, oh, okay, well, I don't like it, but I'm okay with the $5,000, or I have to go ahead and pay the $5,000. The problem is where if you have 10 cabins on your property, or maybe you have a shed and a main clubhouse and maybe 6 or 7 other outbuildings of some sort, maybe it's cabins, maybe it's a shop or garage, maybe it's the well house or the pump house, maintenance shed, and all of those buildings have damage to the roof. and now we have a coinsurance penalty on all of those structures, that's where it starts to add up, where you're looking at maybe $40,000 or $50,000 versus just $5,000. If you had a forest fire and you lost all of your buildings, now let's take a look at that and say, okay, well, what about the contents? And the contents were underinsured because you were thinking to yourself, well, gosh, all of the contents in that building when I bought it last year were all used. Maybe they were 5 or 10 years or even 20 years old. They really weren't worth a lot. But at the same time, we're actually looking to replace it with brand new stuff. So what did the couch cost to go out and buy brand new? What did the desk cost? What did the computer cost? Well, we forgot all the other equipment in the back storage room. We forgot that we had all the inventory in there and the shelving. Or maybe it was a shop building, and when we stop and go, holy cow, look at all the drills and saw blades and maybe a toolbox with hand tools. All of that stuff, if you had to go out and replace it brand new tomorrow, is that the value that you're actually insuring it for? Normally, most people are underinsured when we talk about the contents. So I really want to make sure that we emphasize the coinsurance penalty was put into place to try to get people to insure their property correctly. And normally, we're not insuring it correctly just because we just didn't take the time to go through and evaluate it correctly. If you have any questions, please reach out to Leavitt. We'll definitely answer anything that we can or send you additional documentation. If you are looking at your current insurance policies, there is normally a page or two in your policy, and it's normally highlighted pretty big in bold letters, coinsurance. And there's some great examples of being adequately insured or underinsured if you're looking for the fine print on that or how that would work, or if you're more of a visual person. But I hope you find this helpful. Take care, have a great day, and look forward to talking to you guys in the future.